Hey everyone, happy Thursday, April 27th. It's a little after 10:30 on the West Coast, and it's time for another market update. The sun has finally decided to come out in Central Oregon just in time, and this weekend is my company's charity golf tournament, the Camp Eagle Cap Golf Classic, where all proceeds go to support an amazing charity, Camp Eagle Cap, which takes disadvantaged youth out into the Eagle Cap Mountains on a camping trip of their lifetime. So hope to see you guys out there if you're a part of it. If not, join next year. So getting right into it, another busy week in housing news, like every week these days. First thing we got was February Case-Shiller. It's an appreciation report on home prices. That came in at plus 0.2% after 7 straight negative months. It's only down negative 2.9% from the peak in June of 2022. So taking a little closer look, one thing I want to mention, it is down to 2% annually. And the way they do this year over year number, here coming up in a couple months when we get May's numbers in July, we might see that number turn negative. You might hear a lot of talk on, national housing news media about that, but just know that's how they calculate the numbers. And at that point in July, we're probably going to see a pretty strong housing market going on. So just know it's how they calculate the numbers and kind of, cancel out that noise. It was also good to see that 3 of the biggest gains as far as monthly for top cities was San Diego, Los Angeles, and San Francisco in California. All 3 of those were kind of the ones that were losing value the most, according to these reports. So it's good to see that kind of turn around. Next thing we got, very similar, we got the February numbers for the FHFA, similar to Case-Shiller, the difference being that they do not count jumbo loans and they do not count cash deals. So they tend to be a little bit lower price homes. That was up 0.5% after being up 0.2% in January. It's only down 0.2% from the peak in June of 2022. Probably a little bit more on the West Coast, but again, nationally very flat. So that's really good to see. Taking a little bit closer look at these numbers. We could see that, in the South is where we got most of the gains. West is still showing a negative 2.7% decline. But again, far cry from a crash. And along those lines, taking a look at this chart, this was interesting. It's showing the early 90s correction, this current pandemic correction, which I guess is what people are calling it now, and then the 2007 through 10 crash, and how home prices went according to that Case-Shiller report. So we're going to have to see if this pandemic correction is going to be more like this 90s correction, or it's going to be more like these 2007, 2008, where we're going to see it come down or start to tick up and then go down more. I would bet on the former rather than latter, so more like the 90s correction, but we're going to have to keep an eye on it, and we shall see going forward. Next thing we got was March new home sales. So I got one of these for you guys. So that was up. That was up 9.6% month over month. Strongest month in 13 months, which is great to see. Builders are still killing it. Definitely in the South. That's a big number in the South. The South's doing really well. And then one thing I wanted to point out, taking a little closer look at these numbers, it shows there's 7.6 month supply. When you factor in just the houses that are completed, that's only 71K, so 1.2 available month supplies. So still tight number. So don't go off that 7.6, go off completed. Next thing we got was March pending home sales. We got that today, and this was a big miss. This was expected to rise by 0.5%, and it went down negative 5.2%. But one thing I want to point out is that 28% of homes that sold over asking, and the average number of offers on a house that sold in these negative numbers was 3.2. So this isn't a matter of no interest. This is a matter of no inventory. There's no inventory out there, so that means there's not going to be a lot of homes sold. So that's something, tied to rates. We talked about before. Sellers are not willing to list right now, things like that. So that number was a big miss, but it makes a lot of sense. And it's not that people aren't interested. People are definitely looking to buy houses. Next thing we got was initial job claims today as well, and that came in as a miss, what we wanted. So they were expecting about 248,000 new unemployment claims. That came in at 230,000. So as we've talked about, this is something the Fed's looking at very closely. So this plays into their narrative of the employment market is doing almost too strong, and we want to see some weakness there before we back off our rate cuts or rate hikes. Next thing we got purchase apps. Purchase apps were up 4.6% last week. Still down negative 28% year over year. Up 4.6% last week. Last week we had a nice little rally, a little bit in rates. They've been going up and down, which we'll talk about in a second. But that, like we talked about, that correlates. And, the more homes we had available, the more inventory there would be. We'd have more apps. People don't apply when there's nothing to buy. Next thing we got was, miscellaneous news. So just a couple of items I wanted to cover real quick. The Q1 GDP, we got the first reading for the United States Q1, GDP, and that was expected to be about 2 to 2.5% growth, and it only came in at 1.1% growth. So that is definitely a miss. That is definitely a sign of a slowing economy. So let's hope the Fed kind of pays attention to that. Next thing, loan performance. We got CoreLogic's numbers, which again are still showing, multi-decade lows on foreclosures. Overall delinquencies are really low. 30 days ticked up a little bit, but inconsequential, not very much at all. And really, the overall delinquencies are 6 times lower than they were right before the crash or during the crash of 2007, 2008. So completely different environment, like we've talked about before. Next thing we got, so the average 30-year conventional, it's right about 6.57. This number hasn't actually updated today. I would expect it to be a little bit higher. Let's just say 6.60. So down from 6.67 last week. Again, we're all kind of waiting, looking towards things coming up this week, which is tomorrow. Tomorrow we got PCE inflation data. This is the Fed's favorite form of inflation. So the markets are kind of looking towards this and to see what will happen. And my take on the PCE is that it's going to be a lot like CPI, where the overall number, the headline number, might come down because it's replacing a big number last year in March. However, the core number, which the Fed's favorite thing to look at because it strips out energy and different food prices, that was a smaller number last March. So that one is going to be hard to make a lot of improvement on because they do the year-over-year numbers. So it'll be interesting to see how the market reacts. It might be a mixed bag. It might be one looks good, one doesn't look good. We might, so it'll be interesting to see how the markets look at that. And then the next thing I wanted to show with you guys, look at that. The Fed meeting. The Fed meeting is coming up next Wednesday is when they're going to announce their next hike. Right now, the markets are saying 87% chance they're going to raise it again by a quarter of a point. 13% chance they're not going to raise it. My thought, talking to a colleague last week, was for them not to raise it, we were going to have a really good unemployment number today, which we did not get, and we were going to have to get a really good inflation number tomorrow, which like I just said, it seems like it's a coin toss on that one. So everybody is just kind of expecting on Wednesday we're going to get another quarter hike from the Fed. Don't agree with it. They're driving, looking in the rear mirror like we talked about before. They're making decisions based on old data, which is not how you should do things. So that's something we're just going to have to deal with because the Fed's in charge. So by this time next week, when I do my video, we'll have that PC inflation data. We will have that Fed hike. So at that point, I'll update you guys what's going on. Maybe they'll surprise me. Maybe we'll get that. Maybe we'll get really good inflation data tomorrow and the Fed backs off a little bit. We get that 13% chance that comes through. So if anybody needs anything at all, please don't hesitate to ask, and I'd be more than happy to help. Have a great weekend and enjoy the sun if you're out where it's sunny. Have a great day, everybody.